Hi, welcome to Penser Bank in our interview with Fingerprint cards. I have with me Ted Hansson, who's CEO of Fingerprint. Hi, Ted.
Hey, Marcus.
So you released Q2 earnings this morning. Mixed report, but overall there are positive signs. If we start with the mobile phones in China, which has been the big problem. If we can talk a little bit about the mobile phone value chain, where inventory levels are, etc.
Yeah, I mean, clearly the mobile phone market is moving again for us. In the second quarter, we more than doubled the revenue from the mobile phone segment. It's also an increase compared to Q2 last year. So clearly the channel is moving, and we also reported that the order book at end of Q2 was stronger than at end of Q1. So we see a continuous inflow of orders. We see that all the customers are placing orders regularly, and that means that the inventory in the channel upstream has reached a healthy level since all customers are moving at a good speed right now. Then, of course, if you look at the suppliers such as us and our competitors, there is still excess inventory that we believe that we will be at a normal level in the fourth quarter. And we will have to see how the competition is developing. It might be so that they need a little bit more time than us to reach normal levels. But overall, it's of course moving well now when we managed to double the revenue quarter on quarter.
Mm-hmm. We'll come back to this. When we talk about the gross margins. But if you look at the inventory levels again, and you look at because I know we talked before about the OEMs were having kind of normal inventories already at the end of last year, and then in Q1 you saw some of the value chain who lowered inventories more than you thought they would. So if I look at these levels, you say that there is excess inventory, but are we starting to reach at least some levels in the value chain a kind of normalized level?
I would say that if you're looking at upstream, you have the distributors, you have the module houses, and you have the mobile phone OEMs. There are a couple of OEMs that are back to normal inventory level keeping, but most of them are running very lean right now, and so are the distributors. As you know, the interest rates are up, the cost of money is higher, so everyone is trying to have a very low inventory level. So I would say upstream from us, it's very low right now still. But you can see, I mean, the evidence that we keep getting orders from all customers for all the projects is as a clear evidence that upstream there is a very healthy or even even below normal inventory levels. So that part is cleaned, I would say.
Mm-hmm. And if I look at the end user demand, what's end user demand like?
Well, it's been a bit up and down. In China, there is a government body called CAICT, which is reporting mobile phone sales monthly. And every phone that is sold in China needs to pay VAT, and this is how they track the number of phones sold to the market. So it's a very accurate number, I believe. And in May, which is the last report they released, they actually saw a 25% increase year on year. Of course, last year was especially bad because May last year was, during the pandemic and the lockdown period, right? But it's still a sign that it's actually growing in May compared to last year. If you look at the global mobile phone demand, the consensus is there will be a slight decrease compared to 2022 level. And then from 2024, it's expected to go back to growth again. And I think the Chinese sentiment is probably similar to this. We can see that the unemployment rate is still higher than historical levels, but it's better than what it used to be. There are challenges for normal people when it comes to inflation and consumption. But the indication that May was so much better than last year May is still a positive sign. and I expect that the Chinese mobile phone market will bounce back to growth faster than many of the other areas in the world.
And it's likely also that over the long time you will see it going backwards in absolute terms to kind of historical levels.
Of course, and there is one more interesting point maybe to make, because of course, our customers, as you know, a large part of our volume is sold to Chinese OEMs, and they are of course especially strong in China market, but also in other markets like Southeast Asia and India and so on. It's interesting to see now that in May, actually the domestic brands in China took 86.2% of the total volume. This means that Samsung and Apple and other foreign brands are taking less than 14% of the local market in China, which is an interesting observation.
Yeah, it is. And that should mean market share gains for you, I assume, in the local market. You speak about normalization of pricing in Q4. Is this when your destocking is over? And at that time, how should we look at ASPs and gross margins?
Well, if you look at the mobile phone market, we took out a big part of our inventory in the second quarter, and we're very happy with that. And that helped us to generate a positive cash flow in the second quarter, which is, I think, a very strong message in this situation. And we will continue to deplete inventory, and we are aiming to go to a quite low inventory level, and that we expect to reach in the fourth quarter of this year. So from now on, you will see that in Q3, a large part of our shipment will be from inventory, and gradually the rate of new products that we have purchased with a much lower input price will increase. And as that happens, we expect that the margin will improve over time, because the purchase price now for silicon is significantly lower than what it was when we built the inventory before the lockdowns last year, before the pandemic lockdown last year. So that we expect will help to increase the margins. However, there is still a lot of excess inventory at the different fingerprint suppliers, not upstream in the channels, but looking at our competitors. And we don't know exactly when their inventories will reach normal levels. It could be a bit later than us. So we expect when that happens, the whole market will go back to more normal levels, and the consolidation will happen in the fingerprint sensor suppliers for mobile phones.
And optical sensors, what is the status on that?
Optical sensors is very interesting. We are now running several projects in parallel. There's a lot of work now going on into finalizing those projects with several customers, and we hope to be able to announce more launches, interesting and significant launches in the second half this year. We can see that the rate of the displays that are supporting under display fingerprint sensing, known as OLED displays, is actually increasing now. And we can see that the rate of capacitive will go down and the rate of optical will go up. So we are excited about that. At the same time, we still see a significant higher ASP for the optical. And right now we also see a better margin level for the optical than the capacitive. So we hope to come back in the second half with more exciting launches and development in the under display segment.
And if we talk a little bit about the other segments, PC saw low sales growth, still significant, and I guess in a subdued market. Could give us more flavor on what's going on what's happening in the PC market?
Yeah, well, you're right. Overall, the global PC shipments are down. Despite that, we actually had a record quarter for PC. I'm very happy with that, very pleased with that. And we managed to achieve that by increasing the market share with our largest customers. And as I have explained before, it takes time to grow the market share within a PC OEM. You need to qualify yourself, and then you can increase your market share. You can enter new segments. And we see that is what is happening now according to our plan. And going forward, we expect that this will continue. We have a very strong offering in PC. And right now, we are sampling our complete biometric solution for PCs, meaning we have an in-house MCU, a microcontroller, and of course, our in-house fingerprint sensor packaged into one system package. And that is now what we are running new projects with PC customers. And this means that we are actually going to climb the value chain, and we will be the biometric system solution provider in PC. And this will help to drive the revenue. And of course, we remove margin stacking, which will help to maintain a healthy margin in the PC segment. So I'm very optimistic about PC going forward. We're also making good progress with adding new customers. It takes time, of course, but we are making good progress. We don't see that there is any blocker for us to enter any PC supplier. Maybe the exception would be Apple, that is using their in-house solution. But except that, it's all definitely addressable market for us, and we are working hard on launching with the remaining ones, so to say. And just I want to add one more thing, that this biometric system solution that we are developing now for the PC market, it's also very suitable for the access market. So with that, we will be able to deliver a complete biometric system that is easy to integrate. It provides great biometric performance, great security. It can be pre-certified and pre-tested and so on. And you can easily integrate that with a very competitive cost structure in different logical, physical access products. And that is something that we are going to take advantage of now, both in China, but also clearly outside Asia, where we see a lot of increased interest in biometric solutions for different logical or physical access products.
Mm-hmm. Because access sales was quite lackluster. I mean, they've been down quite a lot. So could you explain there's a good outlook, and you just explained some of it, but could you just give us some more color on what pushed sales down, and maybe talk a little bit more about your view going forward?
Yeah. So first of all, we are not satisfied with the access sales in the second quarter. We have been working on some really interesting key projects for access, especially outside China. And we can see that some of them are delayed. When a new customer is adding biometrics for the first time, of course, the predictability of that business is not as good as when something is running for a long period of time. So we don't see that we are going to lose out on this business, but there has been a delay in the timing. And that is part of the reason why we saw a weak Q2 in access. So I hope that will pick up now in the second half. In addition to that, last year we did sell quite a lot of large sensors to the Chinese door lock market. At that time, we had a high silicon price in the industry, and we could sell them at a relatively high price. What has happened then is that the construction work stopped in China, and the door lock market faced a very serious downward trend in demand. And some of our leading door lock customers are still eating off that inventory from last year. So the sell-in is still limited. We're not talking about losing market share here. We're talking about the market basically disappeared for a few quarters due to the lockdowns. We are seeing low volume shipments in this market now in China. Most of that shipment is going to be on smaller sensors compared to what we were selling last year. So we can see that the door lock market is moving towards using smaller sensors, more in the size that we're using in the PC segment compared to the quite large one that were popular before. And that is is due to, of course, us being able to provide better system performance with smaller solutions, and also the MCUs that the customers are using are with increased capacity, and they are able to run a more advanced algorithm to get good performance. We also see that we are transferring from selling mainly silicon to selling packaged and even system solutions with MCU and the sensor going forward. But you're right, the Q2 was impaired by both delays, I would say, outside China and a weak demand inside China. But we have a very positive outlook on the access market, and we are confident that we will see a good growth going forward in this area.
And can you say anything about which segments within? I mean, access is extremely broad, and with tons and tons of applications. So can you say a little bit about which areas you're most optimistic about?
Well, I think in China, the physical access is the largest one. Outside China, we see both the logical and access market increasing significantly. I would say right now, logical access is probably going to grow faster than the physical access outside China. And I think we have a very good match between our offering and the customer expectations. You know, we are a trusted biometric supplier, more than 20 years experience, and many of the customers that we see that want to adopt biometric solutions right now, they come from a different background. They don't have the biometric experience. They need someone who can deliver quality, who can have a secure supply chain, and who can partner with them and train them and make sure that they provide good solutions to the consumers. And I think that is exactly what we are geared up to do. I would say that we will see a growth both in the physical, but probably faster in the logical access, I would say, outside China now.
Okay, perfect. And then finally, I guess we talked about it a little bit, but I mean, the inventories have been at the center for some time now, and they're not come off a long ways. So they're now back at the kind of 200 million krona level that we were when we went into this. Should we expect further falls? And what is it possible to say anything about what normalized level could be?
Yes, we are going to push down the inventory levels further. We have done a lot of work that we will be able to utilize now when it comes to using common materials, reducing lead times, simplifying supply chain, and so on. And also we can see that many OEMs are using a kind of a common design for many models. So the number of unique article numbers is decreasing, and this also helps to facilitate a lower overall inventory level. So we are going to push down the inventory level significantly from here. I don't know if we can go all the way down to half of what we have today, but it will depend a bit on the product mix that we will see. But roughly there is something that I would like to aim for, to shave off another 100 million in that range of the inventory.
Excellent. With that, I would like to thank you, Ted, for coming here and talk to us, and wish you a very good summer.
Thank you. You too.